So before I begin, I wanted to give an update. I know a lot of traders like the idea of using a standing desk. This is sort of like a new thing I've been pioneering. I had some bad success with one that wasn't motorized, and it was a little too heavy to lift multiple times a day. I now switched over. I'm trying a brand called VersaDesk. So far, my reviews on this are a little mixed. Um, One is the one that they have on the website is a little bit different than the one they sent. I had ordered white with white metal. The one that they offer on Amazon has black metal. They are replacing it though, so that's coming. My other issue was when it came down onto the desk, it was a little bit of play in it, meaning there was a little bit of wobble. But they're sending me complimentary bumpers that you put underneath the keyboard, so that should take care of that issue. I will report back. When it is in the raised position, it is fantastic, though. So that's a little bit of an update on the standing desk. It's obviously very monotonous to sit all day, every day, and it's good to have a standing desk. So let me begin the recording for the monthlies. Anyhow, let's get rocking and rolling. We had a bit of a choppy session that we've been in the last few days. There was a excess low on Monday. I pointed that out in real time. And I had pointed that out on the stream, and the market was able to rally, make a higher low, and then continue on. And then I think when the shorts realized on Tuesday that the move wasn't going to be down, we had the gap up and a trend day to the upside. This is obviously shorts. This is indicative of a short covering rally. There wasn't a ton of crazy strong breadth in this move, and I think some of the lack of news that we have right now, we're basically trading off headlines, and I think a lot of people. First of all, we had a poor high here. I had mentioned in real time that we had poor highs here. They were repaired, but then we ended with poor highs, and the ES began to come off in the overnight. A one tick look above in the overnight doesn't count. It has to be during the regular trading hours. And there was some pullback on some of the comments about the potentially the government being shut down. And you had this pullback. Intraday, there was a bit of a rally early. There was some pullback, a rally late, and then closed sort of rather weak. I'll say this. I think some of the weakness at the end of the day was just that people had played long, and nobody seems to want to hold overnight. It's just all like short-term traders. And you also had poor highs. Look at this. You had all these poor highs. You had the back off, a pull up to make them even more poor, and then a liquidation break back down. So the what now is, are we going to take out this low? If so, how far are we going to pull back? This is sort of the overnight breakout. There's a potential, obviously, to fill in the gap if it is to be. We've been doing a lot of that lately. I'll show you in. That's not the chart I wanted to show right away, although we will be getting to Lazy Boy later. Not in the weekly. Let's do it in the 9-month daily. If you pull up the SPY chart, you'll see we've been doing a lot of gap filling, right? You had this gap up here. We came down, came up and filled the gap, then came down and filled this gap, and even went a little bit further. This got the channel low right here, the 2-day low. And again, it was another one of these short squeezes. This was sort of a look in and fail, and then came back up to the upside. This was yesterday's price action. I'm in SPY right now. Let me zoom in a little bit further. Yeah, there we go. I have a lot of lines on the chart. Please forgive me. But the 78.6 held here. We rallied back up basically to the half back point. And I had noted in the weekend review video that without getting over the 61.8, which I had pointed out was 246.21, the market was still going to be a little bit suspicious in my view that it really needs to clear these bodies of these big down candles to make everyone who shorted that day and everyone who sold wrong. And then I think it would be a clear sailing back to the upside. Today we had obviously the news break. This didn't close particularly well, although you're still basically midway of this bar. And you can see the low of day basically stopped at this sort of like gap level and this day's high of day. For me now, for this to determine which way we're going to resolve, are we going to be up or are we going to be down, just look back in history here. I had mentioned that I thought this period of time that we're in here is going to be very similar to this period of time with a lot of chop and back and forth. If you take a look at my chart from the weekend review, you can see from the period of, I mean, even 515 all the way even up to like 711, like that whole period of time in SPY had a lot of these like 100% retracement moves up and down. And I think we could be in some of that type of chop. So in the short term basis, if you're on the SPY chart, I'll show you a couple of quick things that you can look at. The 245.01 was this range high and a very key breakout point. You can see it broke out here. There was a bit of a look in and fell, and then it kept on going. And we had another kind of big range day bar. Also, look where that is. It's right up just above to where yesterday's high of day was before the back off. But the key point to me was today's high of day, which was 245.05, which we could say may have been a bit of a look above and fail, and we closed below the 50 MA and the trend line again. So today's price action, I would say, is a little bit inconclusive. I'll say this though. We're on a very short-term time frame, and you don't want to see people getting acceptance back into this distribution here. This to me would be not good. So I think you could use today's range as a go with, either long above for a move higher, maybe even up to the 61.8. You could see where that channel low is if you draw, a trend line from the 8.8 high to the 8.16 high and just draw it down. That intersects roughly with the 61.8. So I like the idea of a go with of long above today's range high, which was a poor high, so it likely should have some repair, and then the low of day could come down a bit here. It's very possible that we even fill in this gap at some point. If we lose this day's low, I'll say that we're probably going to continue the pattern of the lower highs and the lower lows for a while. And keep in mind, this was an excess low. This should not be violated. If this is violated, I will say that I think we will come down completely to the 239.96, basically 240 range, and we'll have to see what happens there because that's the true range low here. So tomorrow's trade is going to be very key. Can we get up over today's high of day, or are we going to be back up below today's low of day? And that to me would bode poorly. The IWM is also, you have tweezer bottoms here, and notice if you watched in my weekend review video where we had talked about these declines, and I had said that this one was already a lot for where we were, and you have the 2-day low you had popped up, and this actually closed, I think, a little bit better relatively. It wasn't really more toward the middle or the low. It was sort of a little bit higher in the range. I'll say this again. You have a 2-day range again. You had 2-day range here. You had 2-day range here. I like either long above for the move to the backside of the old uptrend line, which you can see is drawn in clearly here, which could coincide actually with the downtrend line, or short below the 2-day low for further extension lower, maybe to the range low here. You can see that's been the pattern. We've had these moves up. It's been a bit of a stair step down. I think a lot of the concern in the IWM is also because of the tax reform. Those companies really need it to do better to justify that price. So keep that in mind. The more tax reform looks likely, the better it is for IWM. The less likely it becomes more problematic. Into the Qs. The Qs have been actually a little bit stronger. We're still above the 50 MA in the Qs. We're still above this range high here from the 826 peak. and we're just consolidating inside the bar. However, we stalled on the 20 MA here. So my answer to this one is going to be very simple. Obviously, it would be long above yesterday's high for a move back up to the channel high, at least the 230, 243.90, maybe even the channel high. Or if we were to lose this low, we could sink back down and maybe even fill in this gap to 139.05. Like it could be this kind of like dribble lower. Qs in general, though, have been holding up well. You've had some pretty good price action in big names like the Mac Daddy of all Mac Daddies, Apple. This had a fantastic earnings report. It gapped. This was a professional gap, by the way, above the trend. Had a little bit of pullback, but then made some highs, pulled back, highs, pulled back. And now we're hovering right around the earnings after hours high of the earnings, which is the 160. Today we closed, I think, just below it at 159.98. You're right. I'll say this, and I said this in the weekend video. Very similar issue here. The 20 MA is key. When you lose it, it tends to have these bigger, larger type of breaks. Here it's supported. See, so here it's supported again. So I'll say Apple needs to hold. The real true key measure for me, and this could just be one of these kind of like wobbly plays, it needs to be above 156.65 and it needs to be above the 20 MA. If you lose the 20 MA, I think this will slam back down to the 154. And I mean, it's possible it even fills in the gap if the market gets soft. But again, as long as it's above the 20 MA, I'd say that the risk is up. Below, it becomes a little bit more balanced and maybe shifting back to the downside. The Google, the googly-eyed one. You have a range low here at 920.80. This has been support multiple times now. This is now like the fourth test. If it's tested again, I don't think fifth time is going to be a charm. I think that will result in a gap fill. But today's price action was good. It was stronger than the overall market, and it did close above yesterday's high, which is good. Let's not mince words here. Even relative outperformance is usually good. So what I would say is you could just draw a trend line in here from this area, since this was a peak and we got a retest here. I would have used this, but since we basically got back up to it, this to me is close enough. We're peaking like right above it. So I think you could use, again, today's range for a quick trade would be long above for the move to the 50 MA, which you can see was a key MA here. Or below the low, I think you could maybe play short for, a retest here. There may be like some kind of a minor bounce, but I would think then it would come lower, particularly if you negated both of these 2-day bars. So that's going to be very key with regard to Google. The BABA, a lot of people, this has been unbelievably strong, and I've been positive on the stock. I had said that there would be an ideal to book some profits here, but we had some poor highs that were need to repair. This is actually now outside of the channel. So what I would say to do if you're long BABA is very simple. You just keep watching and make sure that your day's low doesn't eclipse the prior day's low. This is also known as one-time framing. And as long as it's one-time framing, it's going to go higher. The fib extension that I'm targeting next is 182.80, and potentially even up here at in the 220s. That's a whole other story, though, and we'll get to that at a later point. But what I would say is just keep raising your stop of the prior day's low, and once it's violated, you can book some profits. This, to me, I still think is okay as long as it can hold the backside of this trend, which you can see in the video here. If it even pulls back to here, usually the initial move is a bounce, but a second test into it usually resolves in at least a move to the midpoint of the channel, and a gap fill could always ensue. So just keep trailing the stops up and use the prior day's low. If you don't want to even give up that much, you could use half of the prior day's bar. This one's a little small, so this one, if you look at the low of day today, actually it is roughly half back. So I think that is a good strategy for such. Someone asked about NQ. I'll show you. This is just in a bit of a down. This was a bit of a sideways to down trend. You're right on the 200 MA 15-minute. just use the channel. I would assume the channel low is a buy, the channel high is a sell until it's not. Same thing in ES. Look at this. You played the channel very well. Early, it was a look below and fail. You rallied up a little bit of a, the poor highs were look above and high fails, and now you're basically on the trend low. The risk here, though, is that you start getting into these, the single prints here when this came up on pure short covering, and then that isn't so stable. Like you tested it here into the prints, it rejected. The more it accepts into this bar, the worse it is. So you really need to see this to get back up over 24.41, and I would say even back into value, which is really where we spent most of today's range. I mean, theoretically, when you spend this much time in value, you really should rotate up to a point of control, which was also a reference peaks here, and even up to the value area high, which was basically the prior day's highs. But we wound up closing below value. So I would say at the very least, you need to get back into today's range and make those people not wrong. Let's go back to some charts here. Someone asked me today about American Airlines. This isn't one I follow often, but I thought it was an interesting chart that I wanted to address for that gentleman and for all of you. I don't use 38.2s in retracements. I use them on bounces for like profit centers to break profits or but I wanted to show you what happened to coincide here. I'm just going to remove it because for our purposes, it's not a retracement fib that I like to play. Look at this. I've drawn in some fans here from the gap from this retest low, and you can see I'm connecting lows here, right? We're right on one of them. This tertiary one, which we can, I think, make another color here. Let's make that yellow so there's no confusion. We could get rid of this downtrend since that's been broken. And we could even make this the big green. Let's make that like a 2 so we can distinguish. So you're right on here. This needs to hold, in my view. You've had now multiple days down. So this should theoretically have a bit of a bounce. The 200 MA here was the key. So the bounce obviously would, in my view, would be to the 200 MA. Then it would be decision time. But for me, I actually would be a little more intrigued with this one if it came further down to the 50% fib, which is around 39.62, and it's also the real better trend line out of the two. That's also this range low. And if you're coming from really a new high, a breakout to the range high, and it's a failure, it could theoretically come back to the 50% of the entire move. That was also really the breakout. Look here on the 9798 highs, you kind of spent some time there. It retested, and it may retest again. That area to me would be the first of all, a good spot to cover if you're short, and more importantly, a spot to try a right or right out long. Maybe even if it's a straight move, a straight shot, which would be, of course, the ideal. You'll probably get some kind of little pittance of a bounce at the very least, and then it would go. But that area to me, the more stretch this gets, I like it. A lot of people get very fearful when things get steep. When things get steep, that's usually the end of the move, not the beginning. It's when everyone's sort of throwing it up and they've given up. Of course, these schmucks on television will tell you that it's the time to puke because none of them have worked I was going to say an honest day's work in their entire lives, but I won't go that far. I'll say that they've never worked on a trading desk. Ulta Salon. This is one that everybody likes to talk about lately. And I've been talking about it for a while too, and I've said that I thought we would see the trend low, the channel low. Now we're here. Started from the top, and now we're here. Kind of a little bit of a reverse there, right? Where you'd say you started from the bottom, now you're here. This is the neckline, right? From the 527 earnings, we retested here, 2, 3. This is now 4 times. What's noteworthy is that it's from a new high without a bounce leg. Yeah, you've had these pauses. This is not a separate leg. So theoretically, this area now should be the low. The risk, of course, that we run, this is the lives we've chosen for ourselves to be a little bit of Godfather-ish, is that this breaks and that we do see the 61.8, which is down to 211.28, and the gap fill, which is like 213.69, basically close enough for government work. There's also another gap down here at 163.39. I don't think that you're going to fill both gaps, although this could pull some kind of O'Reilly move and really just completely go nuts. My experience with momentum stocks is that they usually have at least a throwback leg before to a lower high before they really collapse. So if you're looking for a right or right out long, and I would not do this unhedged, mind you, I would do this hedged, either being long a put spread, put ratios, or or a fly, like you buy these, you sell these, or if you do, that would be the spread. If you do the fly, you'd be like buying, something in here. Maybe the 25 is playing with this a little bit today, buying the 25, selling like the 15s, and then like buying the 200s. I think that would be an interesting play, even as an outright short play if you want to play for the downside. But I think a call spread, would be this. I mean, if you're going to do it, it's sort of, this is the spot. There's like, I would do maybe some smaller size, because I would have really loved for this to have gotten steep and filled the gap. And then like everyone hates it and they don't realize that the gap is filled and that we're on a 61.8. And then we, take off to the upside. I mean, we still have one more day of trading. My guess tomorrow is that there will be a trade over today's high. And I'm just speculating, because you have a ton of people short in here, and they're probably saying, "Holy crap, is this, going to be it? We're on the low, the channel low. I don't want to give up these profits. It's going to rally." If it rallies really hard tomorrow on the short squeeze, and I think that's actually a viable play to play long over today's high for a squeeze up, maybe even to the 20 MA, you might even play it as like a play into the earnings and not be long for it, or parlay, not the Johnny Depp parlay from the Pirates of the Caribbean, but parlay those into other, and not football parlay either, which we could talk about another time if there's enough interest. But a parlay into another play, maybe like you buy calls, maybe do a call fly to the upside or a call spread to the upside for maybe some kind of a check back. But I think that there is a play over to today's high tomorrow for a squeeze, maybe into the number. If the move is down, that gets me even more interested in playing, the calls. I would probably be looking to book profits if there is some type of a rally of intraday, at least on part of it, and for sure have a stop and be playing this after hours. But if there is a move, if there is some kind of like puke tomorrow, I don't really think that's going to happen. I think it's a more unlikely play. Then I would be absolutely DTF, meaning down to fill. Lazy boy, not one that anyone asked to speak about, but I'm in charge here, to quote the late, great Alexander Haig. Anyone ever see The Day Reagan Was Shot? That's an amazing movie. Anyway, check this out. We've had these histories of large declines of like $9, $7 here, but mostly 9 on the big legs. Look where today stopped, right at the 61.8, right near a $9 decline. Pretty interesting, right? The more interesting point to me is this, that we're near a volume distribution. And if you look at this on a weekly, you got to get real OG with this. Moves below the 200 MA have been nastola, but once you get back up above, there's a really vicious rally. Look what happened here also. And looky here. We're right here, and if it were to come back up through there, there could be, the rally 2.0. So I would take a look at that 200 MA here on the weekly, and I think you could either buy stop it up over that if you can close above it. Look at this. Everyone probably thought the move was over. Boy, did they not know what they were in for. So I like a buy stop up over the 200 week. Or if you're going to be right or right out, maybe here versus today's low of day. I mean, really tight stop. I mean, if that were to fail, there's a lot of clearance very quickly down to these reference lows at the 78.6. So if you lost today's low, you could probably do some kind of a put spread or put ratio that would take you down to that area. But that's The lazy boy. We talked about the NQs. Microsoft. Someone asked to talk about Microsoft. I saw that earlier. This is just chopping. Are we still on the weekly? We don't want to be on the weekly. Maybe we do want to be on the weekly. You've got hammers here. Interesting. All right. Let's look on the 9-month daily for the moment. What do I got? What do you got here? We got lower highs, a little bit of a lower high. So you have a bounce leg to a lower high, which is usually not a particularly good sign. But this is really more of a flag here. I hesitate to say bull flag, but it sort of is. This was the breakout, right? You're a little bit below it. So how about this? Long over the 2-day high for a press up to this downtrend, or flat or short, you could try initiating below today's low, and then I would add, if you took out tomorrow's low, for a retest of the 50 MA. That would be almost the third test of it, and if it loses, then the 100 would be in play. So that's how I see Microsoft. Again, I think these charts are amazingly good to visualize this. Activision, you're riding the lightning here, my friends. Let me go back to a longer date. 3-year daily. Is that good enough? Look at this. This was the old uptrend, and we snapped it, and now we're just riding on the back side of it. What do I want to do with this? Let me this is actually fantastic. Everyone always asks how I mark up charts, so let's do it live, right? Right now. This is one that I haven't updated clearly in a while, and I'm going to update it for you guys right as I'm doing the video. So we have a new trend channel that we're going to put in, and I want to draw that from here, whichever one of these highs happens to snap. Now, we're above it. We had one test, 2 tests. Are they reporting? My guess is they're reporting. That's why someone's asking about this. They reported already. So their earnings, we were a big beat. Let's take a look at that after hours. 1 day, 5 minute. Did they reported this morning? They reported last week? Okay. Let me take a look back. Hold on. 2-year daily. Oh, they reported. So that no, they didn't report. Oh, yeah. All right. So they already reported. Okay. Good. I was a little bit too quick. I was a little too far zoomed in on that. Yeah, no, I see. I see they reported. Let me see if we did some fib extensions then. I'm curious to see where this could end up. I kind of cheat with the fib extensions here. The low is there and 39.93. All right, so let's add in some fib extensions. Let's add in a 2 for the curve. Just showing you all how to draw this stuff. I think it's important that, God forbid I wasn't around ever, which one day my haters will get lucky. Should know how to do this stuff. Let's do that as a 2 also. Wow, this is up right at the 2.618. And we're actually through it. You had the back off and you're through it. So here's the scoop. Oh, I meant to, sorry, blocking people. We will not use racial discrimination in our, using words like the N-word is definitely a no-no. You will get blocked immediately. None of that, please. I'm glad I happened to catch that. All right, so where were we? We reported stock is up. All right, so check out today's high of day. I mean, you have an up bar, you have an inside doji. I guess you could do the same thing I was talking about with the other. Just draw a trend line in from the last touch here of the low. Sorry that we're doing this. Usually I'm a little smoother because I have my charts prepared for everybody. Today I'm doing this one on the fly, so it's not as smooth and prepared, but that's okay, right? Check this out. This trend here, I would say you could buy it. This isn't drawn in perfectly either. That's the low there is 48.41. Let's make this. Okay. You could use this trend line, and I want to redraw this properly. All right. I like how that looks. I would just keep buying the dip on that trend until it fails. And if you've been long this for a long time, you probably the 50 MA here would be the stop. It coincides right with the trend line, so that's been what's been supporting. So buy the dip. I don't condone chasing the highs here, although I do think that there could be some kind of a quick trade above the 2-day high for a move still further. But this is really extended, and I'll say this. As long as the 50 MA holds, I think it'll still be okay. If you were to lose yesterday's low, though, I might, like, right away, let's say the next few days are straight down, I probably wouldn't be a buyer there. But if this is like, just chopping for a while, then I'd be interested in it. So 50 MA is the key. Near dated, I mean, if you have big profits in this, I would use today's low of day as a stop. And if you're looking for some kind of a quick day trade pop, I think you could buy it up over the 2-day high for that. So that's Activision. I'm going to do some more work on this for the weekend review, though, because that is an interesting chart pattern to me. I see some stuff in it that I'm not going to discuss right now because it would require a little bit more charting work. I'm sorry, what were you saying, Bill? I didn't see a report back about what? About that chart? Anyway, Wynn. Someone asked about Wynn here. Check this out. Also, same thing. This is a professional gap potentially. This one failed though. Look, you had 2 days and it failed. This one's now holding though, and the key here is the 50 MA. So keep it simple. As long as the 50 MA holds, I think it's a long. If you lose it, it's probably a short back for the gap fill to the 100 MA. If you clear these highs, it'll obviously get up to that recent high here and potentially clear. What would my targets be to that? Easy peasy. What we would do here is just draw one of these bad boys in. Unbelievable. 139.67. And we will bring it on up to the 1.618. And let's just add in the 2. I don't want to get too gangsta here with the 2.618 just yet. Click OK. So I'd be targeting this range up here to 149. If you could clear 139, I think the next 10 points would be higher. You'd basically been in a big consolidation pattern here. This was the recent high to the recent low, and you theoretically should throw up past there. I mean, possibly even to 155s, but yeah, it needs to clear that 139. Here is the caveat, and something I want to stress. I like that we have the consolidation here. I like that it's not a complete straight press up here to the highs like this. You came up from the low to the high, and I think that's why this gap got sold, because it was coming up from the bottom, and you got to the reference high without any consolidation. Here we're consolidating. So the more this consolidates up here and fills up this space, the more powerful that move up is going to be. It takes away some of that extended extension from the overbought condition. So 50 MA, I'm okay with it as long as it's long there. And the more powerful move is once it would eventually come through the reference high. So that's a little bit of Wynn. I did Microsoft, right? How are we cooking on time? Doing okay, actually, right? Avago, not one I follow a lot. Someone asked me about this. This is, again, do you have good trade location? Look, I mean, this thing is trading outside the channel. It's had checkbacks. I'll assume that the channel is a buy until it's not. You have reference highs up here. Hold on a second. Listen, this could go full on. I mean, they have earnings coming up. So my question is if you aren't already in it, do you have the great trade location? For me, it's always risk reward. You're up to these highs. They're basically poor highs. Today made a new all-time high. If you were to lose today's low, there's probably a quick short in it for maybe even a potential move to the back low of the range. But just keep, like I said, just keep one, as long as it's one time framing, as long as the prior day's high continues through there, it's okay. I mean, you've touched here now a few times. 50 MA has been supporting. If you've been in it for a long time, I mean, 50 MA is clearly your stop. That's very plainly obvious to me. MasterCard versus Visa, someone asked about. Not Macy's, although speaking of Macy's, this is like a 7% yield down here. It's right on the 78.6. I actually, if you want to be long this, I'm fine with it as long as it holds 19.74, believe it or not. The real question here now is MasterCard versus Visa. Let's see. I haven't looked at this chart in a while, apparently. Let's get rid of this. Let's redraw it on the fly. I think we could use, that's one. And then this would be the second fan out. And now you're almost into a tertiary fan here. Again, really sort of extended, but as long as, I'll say this, keep it above, if you're long 132.20, this is this day's high, the high from 727. If you can maintain above there, I think it's key. If you could start coming back below there, it gets a little iffy. The 20 MA here is all right. So I'll say this, if you have the 10 and 20 confluence, if you're long, I think you can kind of hold it against there. There's a little noise below there, but if you have like started getting multiple days down below, it would be a little bit more problematic to me. I want to draw in a channel here. I think that could answer some of our questions. Yeah, you see, we're a little bit above this channel. I would probably be looking to book some profits into this on a further rally. I mean, this, I don't like when things trade above channels you could see it's been unsustainable for a while. So I'd be a buyer of a dip, but I'd probably be looking to book profits on that into the move higher. Visa is way through my extensions here. Let me do add in the next layer of that. This stock is just a beast over time. Sure. What do you got to say, Bill? What's cooking? Anyway, we are. Let's see. I don't like that channel. We've spent some time above it. Yeah, I think you're coming to channel high and this old progression line that I have in up here. I'd probably be looking to book some profits into that move. You can see we've spent some time above it before. Let me show you that on a longer term time horizon. Okay, we have another person to block. I've kind of suspected he was a problem. I thought I caught something out of the corner of his eye with him before, and glad I caught it now. Take a look at this. This was this sort of, it's a long-term progression line. I think there's a little bit more room to the upside to there, but I don't think a lot of people would would see this or know about this. And I think that that area up here is going to be an area to book some profits. The best scenario would be is if this were to just like dribble on up here and get it right at the a fib extension, that would be an amazing situation. That's neither here nor there for now, and I want to redraw this this channel for all to see. This one isn't really the best. Actually, this one is pretty relevant because it's you can see it's responded to it. Yeah, it moves up to this channel. I think you could sell the channel high, particularly if it gets close to that that extension up there. The that would be if it were to happen tomorrow, which it probably won't, would be into the 106s, 107s. MasterCard and Visa. All right, so AMC is just languishing, right? We had talked. Listen, I had talked about this. Look at this. I did a fib extensions work both ways, right? The 1.618 is down at 887, and the 2 is down at $2.43. I mean, I don't know if it's going that low, but if you're looking either for a long, I would buy the fib extension, or if you're trying it here, I mean, it's got to at least, I mean, the 20 MA has been the problem. There's probably going to be some kind of a throwback at some point, but I mean, this thing is just disgusting. It's pretty bad. I would be a buyer down at one of the fib extensions. I don't know that it's going there, but I don't know that it's not. So the 1.618 to me would be an interesting spot. PayPal. Listen, I've been a bull of this for a long time. This stock is a beast. It's trading in a channel. Moves above have not been sustainable. I'm a buyer on any pullback to like the 50 MA for an initial play. 55 was the real tough area to break out from, and it's also going to be at some point close to the backside of the old channel, which has really never been retested again since this like initial breakout test. I think the stock is going to go higher longer term, but I'm a little loath to chase it here. This bar is the key. Above 61.30, I think it could probably still go higher. Below 57.69 and this low, I think it's all but certain that you'll see the 55s again. So keep that in mind. Someone had asked me, I had promised to do Ferrari. I just saw that gentleman mentioned it there. Listen, again, these are all very extended stocks. Let's add in a 2.618. I'm curious to see where that would come out to. This is like going parabolic here. Yeah, I mean, you're all through this stuff. I'd be, again, booking profits in, this stock into, a straight up move like this. They just reported. Let me get a little closer to that. Picking tops in these kind of things is very hard. This was the day they reported. So as long as this thing is above the 111.46, I probably wouldn't be interested in a short. If it gets back into that range and can accept it, probably you could probably take it as a short or use that high as a stop. You can see you kind of came up there again, pulled back, and then once you got through it. So this really should be the support here, this 111.46. Above it is okay. Below it is, to me, a little bit more iffy. Keep it really simple. I should have talked about this earlier. Bonds. I'm just going in the order. All right. I don't like the sniping that's going on in here. So let's keep it friendly and clean, or I'm gonna have to start blocking more people. All right, you're going, Mr. DJ Simpson. You're blocked. Bye-bye. Bonds, look, I've been talking about this 127.37 area. This is a very important area. This is where the gap starts. Bonds have been acting well, right? This could continue up. I've for a while thought that this gap was going to fill the 130.09. This one's got to go too. Another one, Tula Johnson. Sorry, got to go. Can't have that kind of language in here. Another one. Totally got to get rid of these haters. All right, now that we've done some block, listen, I'm not afraid to block, so just keep it up. We have a channel high up here, right near the gap fill. So let's keep it simple. I do like the idea that this kind of got close. It's pulling back. The trick with the bonds has been to buy it into the weakness and to sell it when it's pretty. But it seems like there's going to be a rally in these because there's fear of the debt ceiling. And I think that that's going to take rates lower. You know, the Fed is doing their best. It just got very sunny here. So we're going to... wait, who is this? Got to remove someone else? Unbelievable. All right. I'm putting on glasses here. It just got very sunny. And as a lot of you know, I am right by a window. Unbelievable. All right, wow, I think this is the most people I've had to block for a long time here. Unbelievable. My apologies to those of you who came here to actually learn something. Yeah, it's hard to disable the chat because I take questions in there. Sorry for those of you watching this on the regular broadcast. I'm also doing YouTube Live while we're doing this. I know a lot of people like it different ways, so I'm trying to do the video both ways. So we're coming up to here. I think that this could be a spot to book some profits. But if you can clear there, I mean, this is an open gap, obviously, and it would fill up to the 128s and possibly to the 130s. So bonds seem to be in a bit of a trend, I guess, just drawing, you know, the trend line. And as long as that kind of holds, it's going higher. Keep an eye on this if there's a little bit of a back off here, and if it will continue. But bonds to me look okay. I mean, I think as long as even if it were to pull back, as long as 126.03 holds, it's really sort of okay. We're coming to the end. Don't worry. Chipotle. I'd done some proprietary work on this and said that this move from up here down to here is about 100. I'm sorry, from this point up here to down here was 190 points. That was roughly 308. And I said somewhere between 308 and 300 would likely start to find some support. It really hasn't been, which is incredible. Have to block some more people. So if this is to continue, the last reference low is like 233.82. I mean, maybe we're in for one of these larger type of corrections. Maybe there is another 100 points or so in the bag with this. This is getting very stretched in my view, and I do think that there's going to be some type of a throwback at some point. I wouldn't be looking to first initiate shorting on this. I know some people are. I've gotten a few messages saying that they were looking to short this. I think you could still short rallies, though. You know, maybe to the 20 MA. You can see that was where this support was before it broke down. It hasn't retested that yet, which shows you just how weak this is. So, I mean, it's the 10-day has been holding it down. So I probably wouldn't be long this until at the very least you can clear the 10 MA or get back up over the 20. At the very least, if you want to play for a squeeze or a bounce play, wait until one day has a higher high than the prior day. Like, let's say tomorrow this was the low above today's high of day, 305.50. That would be a long to me, probably to the 10 MA and maybe even to the 20 MA. Wait for a day to be higher than the prior day. That to me would be more interesting. We talked about Ulta, right? And we'll end on Costco. Wow, there was a lot of hate on this broadcast today, and that's very gotta remove more people. This is unbelievable. Unbelievable how many people we've had to remove. I don't think I've ever had to remove this many people. The 200 MA here was the support. It broke down. It's got to get through that. You can see it's trying to get through there, but it hasn't. Whoa, we got to extend that a little bit. No, it's on auto. It should bring it up there. It's got to get, like, look, we stalled on the 38.2. It backed off. We have some higher lows here. This to me looks like it's just consolidating. One thing that I find interesting, and this is what you guys follow me for, is that we could be forming one of these down here, an inverse head and shoulders or a cup and handle. So first buy would be back through the 200 MA in my view, because that was the last reference high. And then you'd be like adding through the 162.5 or maybe the move to the 50% fib. The 61.8 is really where the gap started. I think that would be a great spot for a right or right out short, by the way, or to at least book profits. But Costco is looking a little bit better. I mean, every time I've tried to get long this, I'm either long, I make some money, and then I'm like stopped out like promptly. So at the very least here, I really need to see this thing clear the 200 and hold, and then I would be a little bit more inclined to I'd be inclined to be long. Anyhow, we're gonna end it there. I hope you guys enjoyed the video. Amazing amount of people we've had to block today, and hopefully, if someone knows if there's a way to create a monitor, like I would love to appoint somebody in the chat to handle this kind of stuff for me. If you're interested in that or know if that's possible, please let me know. That would be something I would definitely be interested in. Anyhow, have a great rest of your day. If you missed this, or if you want to watch it again with the charts, which I think is actually the best way to watch this, I have a link to my subscription YouTube channel. This video will only be available for that. This version will be available on the channel you're on now, just so you know. But the one with the charts will be available on the subscription channel. You can get that link in my Twitter profile. There's a link at Justin Pulitzer. Just go into my profile, click that link, and you can sign up right away. Initially, it has to be done on a PC, but after that, you can watch it on mobile. Anyhow, have a great rest of your week. Sorry for the hate that came through here on the in the chat. We may have to disable. We may have to disable that in the future if it gets this nasty again, but we'll see. Anyhow, have a great rest of your week. The weekend review video will be up on Sunday. And cheers. See ya.